What's going on, guys? John here from Phoenix Trades. Gonna give you the weekend update video, January 30th, 2021. Gonna go over the GameStop madness, how to beat the brokers with their limiting of the buying of these stocks, my little thoughts on the whole Robinhood scandal thing, and kind of what's going on behind that. And I'm gonna go over an example with Apple and sort of how institutions move the market, and sort of go over what I think is gonna happen next. We're in a volatile time. So before I begin, I just want to point out that I run a trading room called the Phoenix Room, where we focus on trade signals, live trading, live education, mentorship. So if you're interested in learning more about how to trade the stock market or growing your skills, the link will be in the description below. The GameStop Squeeze continues. I decided to buy shares at 200 right here, right at the end of the day on Thursday. I passed on GameStop down here at 40 and 35. I don't know why, but I didn't really. No one knew what was happening with GameStop until the beginning of this week. So real quick, if you don't know what a short squeeze is, it's basically when a stock is so shorted and people start buying it up. As the stock price goes up, the shorts, which are only making money if it goes down, as it goes up, they start losing value, they start going negative, so they start buying back their shorted shares, and that buying pressure pushes it up even more, and it squeezes the price up. All right, you have the gamma squeeze, which has to do with options. There's so many options contracts that are being bought. Basically, the market makers have to hedge their delta risk, so they have to buy more shares to cover those options. All these factors are what is pushing GameStop even higher. So I'm going to give you guys a little trick on how to beat the brokers and get some short exposure or long exposure without messing up with the moon tendies, because we all want to go to Alpha Centauri on this. So you've come into the XRT. All right, this is the Spider's retail ETF. So this has a GameStop in its holdings at a 20% value. It's a 20% weight. So it's the most weighted stock in this ETF, and you can see this thing has pretty much been as volatile as GameStop. Almost looks identical. All right, they're not limiting trade on XRT at all. So you can buy this. Now, I'm not saying go buy this. I'm saying you can. I'm going to tell you what I'm doing with it as a creative way. But if you're not going to get the kind of return that GameStop offers if you're doing this. But basically, if you wanted to short something via options and you don't want to deal with GameStop because of what's going on, this is a financial instrument that you can potentially use. All right. If you come to the options chain on XRT, all right. So you can see, I did this on another account, but I came out here and I got the March 19th, and I got like the 65-60 or the 60-55 debit spread. I think I paid $75 for a $5 wide. So basically all that means is for $75, if GameStop happens to tank between now and March 19th, my max gain is going to be $425 per contract, per option spread. So for me, the risk to reward is there, right? $75 to make $425. Even if I can make $300, I can make a couple 100% on it, right? And you can even come out here too. If you really think GameStop's going to explode, you can come out here and you can trade options on XRT. I mean, they're kind of pricey. Obviously, it's a 136% volatility. The volatility is jacked up on this. But if you wanted to do some sort of format of selling credit or debit spreads, you can come in here and do the XRT. If you're still on Robinhood or your broker is limiting trading of GameStop, you can trade the XRT. This is not on anyone's radar, and you can look here at the option statistics. There's not that many calls and puts being traded in it. It's kind of under the radar, and that's good, because if you get it now, the more it gets on the radar, the more people start buying this. The volatility is going to go up, and it's going to make the premium go up. It's going to help you. So that's what you can do with the XRT. As far as Robinhood goes, I think it's a little outrageous. For those that don't know, there's clearinghouses. So the DTCC, that's the Depository Trust and Clearing Corporation. They handle all the orders, right? When you send an order through your broker, the broker transfers it to the clearinghouse. They sort of track everything and they make sure that the money is transferred between both parties. And then the NSCC is a subsidiary of them. That's the National Securities Clearing Corporation. I think they started in '73. That has to do with multilateral netting. There's brokers and offset and buy-sell positions and single payment obligations, yada, yada, yada. This is their capital requirements. This is behind the scenes stuff that not a lot of people know about. I feel like a lot of traders now, you're coming into the market, it's like driving a car, right? You don't really know how it works. You put your key in, you turn it on, you hit the gas, and then you take off. But you don't know how the engine works and how the gas works and how it combusts and turns into kinetic energy and the gears and all that stuff, right? So a lot of people don't know what's going on behind the scenes. All like the stuff, the DTCC raised their capital requirements. So I understand the point where Robinhood is trying to protect itself and meet its fiduciary obligations, but at the same time, you're trying to limit orders on what people can buy. You're not fulfilling your fiduciary obligations to your customers that you've promised, because other brokers didn't do it, and you have brokers like Webull that I don't think are as big that they're like, yeah, you can buy GameStop all you want, and it's just really really sketchy. And I watched the interviews, and I didn't understand when he was trying to say that I understand that the clearinghouses raise their requirements and they're trying to make sure that they can meet those requirements, but to me it just seems like they're only doing one-way orders, and if we didn't expect to be this big, is what he said. They said they're trying to protect for financial reasons, but then he goes and he says that they don't have any liquidity problems, but then they raised a bunch of money, so it's like, okay, then what? Why, if there's no issue, why are you doing it? Thursday they're limiting buying, and then they're saying we're going to bring it back, and then Friday they say, oh, limited buying, you can buy one share, and then by the end of the day it's not, oh, we fixed it, it's okay, now there's 50 more stocks that you're limited. And it's like AMD and Starbucks and Rolls-Royce and General Electric, like they think they're pulling a fast one, like we're slick, like, oh, you can't, these companies too, like who's buying Starbucks? I mean, it's not highly shorted. It sounds like it's a sleight of hand, like, oh, well, Starbucks and AMD and General Electric, and everyone's talking about GameStop. So, if you know a little bit about the clearinghouses and stuff, it makes sense. I mean, the brokers, they make money, pennies of transactions, the clearinghouses. Like Citadel is a market maker. They're making off money on the bid offer spread. So there's a connection, but there's not. And it's a lot of speculation, but at the end of the day, I think what they did is wrong, because right at the crescendo of everything, right when everything was rocketing up, they come in on this day, and they're like, yeah, you can't buy, and the whole thing is, oh, we're trying to protect you. It's funny when they say they're trying to protect you, because you're not, because you will let people, options expire worthless. You will let people put $10,000 into options and let them lose their entire investment on that. But when they want to put $10,000 into GameStop, and you can't even lose your entire investment unless it goes to zero, which it won't. Like, oh, you won't. When you go to Vegas and you put down 40,000 on the roulette table, they don't say, well, hold on, we want to make sure that you're not over leveraging yourself here. Of course they're going to take your money. These hedge funds make billions because people lose. There's a winner and loser at every price level. So to come in here and say they're trying to protect us because GameStop's going to get too high, like, yeah, there's going to be losers on GameStop. Someone's going to buy at 900, and then the thing might tank and come back down to 50, and that person will lose. But it's no different than someone buying at 100 and going back to 10. There's winners and losers at every level. So it's very insincere for them to say that we're trying to protect you, because you're not. You're trying to protect yourselves. So just say what it is. So let me bring you over here to Apple. And I'm going to talk a little bit about, I'm going to use Apple as an example, and I'm going to come over here to my my volume profile. So, and I'll put this in simple terms for those that don't know. And let me clean up this chart for you. Okay. So, all this is showing me these blue horizontal lines. These are this graph is a volume. It shows price by volume. So basically, a majority of trading has been done at the 115 price level. And I want to show you how the market kind of moves based on this, and explain it in institutions. Because I do a lot of supply and demand trading, and part of the stuff that I teach in my room is thinking like an institution, not thinking like retail. So this is September, right? Apple's trading. You can see how price is moving up and down, and it's kind of contracting as it gets closer, and then it explodes. So in this frame here, institutions will basically, they move the market. They will start building up their position here, all right? They'll buy all these shares at 115, and that's why price is consolidating in this area. They're buying it, and they're building up shares, all right? And when price gets too high, they make sure it comes back down, all right? They short it. They want to keep price in this level until they're ready to take it up. So everyone's buying here, and then finally when the institutions are ready, all this volume's traded, boom, it goes up, and it runs all the way up here, all right? This is a double top, obviously. So this is selling and profit taking, but then we stop, right? We have more consolidation right in this area at about 128, and then what happens again? We shoot up, all right? Now here, this is what happens. Institutions move the market up, okay? This is where they're accumulating. This is accumulation, right? They accumulate their position, they fire it up. Okay, now all these institutions and these hedge funds and whoever traders like me are buying up right down here. We go up here, and then what happens? All right, Apple had a stellar earnings, by the way, just blew it out of the park, one of their best earnings ever, and we have this sell-off. What happens is they push up the price. All right, now retail and all the average Joes and whoever are like, ooh, Apple's going up, I want to buy it, buy. Okay, when these institutions have a ton of orders they need to get filled, and they can't just fill it in one order. Okay, they can't just sell in one giant order. They sell it over a period of days. Okay, and I'm going to talk about GameStop in a second with that. So retail comes in, they start buying. Institutions are literally selling their orders to you. You're buying it because it's running up, thinking it's going to go higher. They're selling their orders to you. Retail is providing liquidity for these institutions. They take their profit, they get out. Retail's left with the bag. All the inexperienced traders are left with the bag, and then it sells off. And now you have people that are here. I even saw some posts this weekend of people that were like, I'm down a lot on Apple now. What do? I was up, now I'm down. They don't understand the way the market works. So this is kind of why with the whole GameStop thing, institutions literally do this all the time. They leave retail with the bag all the time, right? They control price, and then when they're ready, they push it up. The main thing here is that they unload price over a few days. So Melvin Capital is saying that they're out of their position. The media, it's all about drawing a narrative. All right, the media puts out a narrative. The hedge funds put out a narrative. Oh, Melvin Capital is sold. No, they didn't. Okay, I was watching the tape. I'm watching the time it sells. We all are. Okay, you need days to unload a short that much. Melvin Capital is down billions of dollars. You can't just, and it was pre-market. This was before the market opened. Oh, we closed our position. Not a chance. Okay, there's still 122% of the short floated on GameStop. All right, that means of the available shares, 122% of them are shorted because they're borrowed on leverage, and they're paying 30% APY on that leverage. They're feeling the pain. So they're going to put out false things and say, yeah, we closed our position. No, they're not. They're going to hold that short because everyone is saying, especially on MSNBC, rich people, all these guys, oh, it's going to come back down. It's not worth it. It's just a $20 stock. Why would you close out a short if it's going to come back down to 20? The short squeeze is still on, my friends. Make no mistake. So don't believe the fluff. And I'm not recommending that you go buy GameStop. I'm not recommending anything. I'm telling you what I see. I'm telling you positions that I'm taking or I'm looking at taking. You can make, the decision for yourself. GameStop is a super risky financial product right now. This thing is massively risky. So understand the risk going into it. I'm just letting you know, I don't buy the Robinhood thing. I don't buy the Melvin Capital. When you understand the background of how markets move and how price moves up and down and supply and demand, you kind of understand what's going on a little bit better. When it comes to the futures, all right, we had a pretty big pullback here. This is about, I think, 6% from the top, 5% on ES. I believe NQ was even more. NQ, NASDAQ was almost 6%. So we've come down. There's been a lot of people that are just foaming at the mouth to get into this market, all right? And it looks like we even came here. This is I got myself a demand zone. So people foaming at the mouth to get back into this market. They can't wait. A lot of cash on the sidelines. We're gonna have to look at the macros, all right? I'm not ready to get long anything yet. I pulled out a lot of my positions. I'm holding some YOLO plays on these meme stocks, but I have a few options for earnings and SPACs that I'm holding. But I'm going to be waiting to see the directional play here. We're going to get some rip-your-face-off rallies, but right now we can see a lot of downside, especially with this GameStop thing. I mean, the market's getting very volatile, all right? You can come here to the VIX, and you can see that, all right? We have this 20 handle. The VIX is a mean reverting product, which means it always reverts back to the mean. The mean would be down here. But every time it pops up, we have this contraction. It comes back down. So we popped up and kind of coming back down, but we're hanging in this level. And the last time we didn't come back down, this was the Corona crash. So watching it closely, all right? Going to watch the dollar, all right? You need the dollar selling off to have a strong market, all right? We've been bullish the last few months, all right? You can see this was the super volatility and the sell-off before the election. The election happens, everything's good. We fire up, dollar sells off, but we're kind of having this reversal now, and we got to watch that and we're going to see what the dollar does. If this thing starts pushing to the upside, that's no good because this is a product where people go when they feel risk. This is like a safe haven product. So people rush into the dollar like they rush into bonds to protect their assets. Institutions, all right? Institutions trade bonds. When the bonds go up, that means that they're heading for the hills. So right now the bonds aren't telling us anything, all right? They're kind of flat. We got to watch and see what these do, the bonds and the notes. If the bonds start pushing up, it's time to get your suitcase and head out the door. So make sure you guys are watching your risk out there. That's what I'm seeing with the market, with the GameStop thing. We've talked about the clearinghouses and Robinhood. Let me know what you think in the comments. That's it for today. If you want to come hang out with us, we have a chat room, link in the description below. I run education. We have a lot of experienced traders. We're trading live every day. That's all, and I will see you in the next video. Let's go.